All right, so this is our second class for taxation of partnership. So yesterday we looked at what taxation of partnership actually entails using the ICAN study text. And we were able to solve one question from there. So today's class will be addressing the 2019 question 1, okay, on partnership. We'll do justice to that question. It's a very simple question. So from the requirement of the question, we are told that we should compute the adjusted or accessible income of the partnership. Okay, that is to say, we want to compute all the incomes or the adjusted income of the partnership. You know the meaning of adjusted income now? Your normal profit that you adjust for allowable and disallowable. That's what we call adjusted income of the partnership. Just 5 marks. Then after that, we'll determine the share of profit among the partners. So we'll determine how much each partners will take as share of profit of the partners. So that is just 3 marks. So all these things are primarily 2 work. Then show relevant workings for prorated salaries and interest on loans of the affected partners, assuming simple interest. So I think in the question, there is something related to salaries and interest on loan. We are going to compute what those figures would be. And that's how we have 2 marks for it. And then finally, before we move to B, it said compute the accessible income of each partner. So the accessible income, the income in the hands of each of the partners is going to be computed. And that one alone is 10 marks. 10 marks. So we have our solution here already. So what I will just do, we'll solve it again. I will explain why the figures are like that. And we go. So the first one is what? This is May 2019, question 1, partnership, taxation of partnership. So that's what we are looking at, taxation of partnership. All right, so the first thing that I'll be looking at, which is number 1, is going to be adjusted income of partnership, Abby. Adjusted income. So let's compute for the adjusted income. You know, we are computing for adjusted income, that is adjusted profit. We'll start from the net profits of the business, of the partnership, and we'll now adjust for it, do our allowable and disallowable. That's what we'll just do. So therefore, what we're going to do, this is in Naira. This is in Naira. Let's come back to the question and see. They said OB Consult is a civil engineering consulting firm of many years. Now, the founding partners are Bibi, Koshe, and Ora. The financial year end of the firm is December 31st of each year. So we have 3 persons that makes up the partnership: BC, Koshe, and what? Ora. And I said the following information was extracted from the partnership's financial statements or their records for the year ended December 31st, 2018. So we're looking at the financial year of 2018. So they said they gave you net profits. That is the profit that we are adjusting. You understand? That's the profit that we are going to adjust. And then they gave us provision for depreciation, which is this. Okay. You know what do we do provision for depreciation? We add it back. It was deducted from the net profit. So we add it back because it is disallowed. Then we are going to replace it with capital allowance. Then the next one, they say fine paid in respect of traffic offense committed by the principal partner's son while driving his father to cash up with flights to Abuja and for a business transaction, 25,000. We don't need it. Okay, it has been deducted from the net profit. We'll add it back. It's disallowed. Who told you to not to drive where? That you now want to pay fine to VIO or pay fine to anybody. You understand? So you have to add it back. It's disallowed. And the next one, they say donation to politicians in business. It's disallowed. It's disallowed. Then we have another donation. A donation to National Library Board of Nigeria is allowed. That one is allowed. Then profit from sale of excavator. You see, all these donations, and from here like this, down to this donation, they are like expenses. Isn't it? So, you know, expenses were initially deducted. So what did you do to expenses? You add them back. Then this place that you are seeing, profit from sale of excavator, is an income. You see it now? So this income was initially added. Isn't it? What do? You deduct it. Now, why are you deducting it? Profit from sale of excavator. Excavator is an asset. So when you make profit from the sale of excavator, it is not taxed. It is taxed under capital gain. I've told you before, I mean, capital gain, when you sell an asset and you make profits, it is taxed under capital gain. So that profit, we are going to subtract it because it was added before. So that profit that we make was added before when they were preparing the account. So what do? We subtract it. So you minus it. Then I'm going to show you, you know, capital allowance. This capital allowance is going to be used to replace depreciation. Abi? Capital allowance, depreciation. And then we have balancing allowance and balancing charge. So by now, you should know what balancing allowance is and what balancing charge is when we are doing capital allowance. Abi? So balancing charge and balancing allowance, both of them, they call them balancing adjustments. Both of them together are known as balancing adjustments. Okay? So what is balancing allowance and what is balancing charge? They usually occur when you sell an asset. So if you sell an asset and you make profit, we're going to tax that profit. That's what we call balancing charge. But when you sell an asset and you make loss, we are not going to tax it. That is what? Balancing allowance. So for balancing charge, when we tax, Abi, it was a minus. Abi, it was a minus. So what do? You add it back. Balancing allowance, it was a plus, Abi. What do? You minus it. You see it now, Abi? Those are what we're going to do there. All right, so let's go. The following additional information was provided. Anyways, I don't really need this now for me to adjust for this. So let us prepare our adjusted income quickly. So our net income, or what did they call it? Net profit, Abi. How much is it? 21,575,000. All right, so what do? We add back what? Disallowable expenses, Abi. Add disallowable expenses. Okay, so what are those expenses I say they are disallowable? Depreciation, nobody needs to tell you, Abi. How much is it? 13,250,000. The next one is this fine, Abi. We're going to disallow it, which is how much? Is it just 25,000? Let me see. I'm coming. Wow, just 25,000. Okay, 25,000. Then the next one is donation to politicians, Abi. Donation to politicians. How much? 150,000. All right, so I said donation to National Library is allowed, Abi. And then that is that about the expenses. So help me add up. You should be getting 13,425,000. Abi? 13,425,000. So help me add it up. No, you're adding. You say add. So add it up to your 21,575,000. 21,575,000. 35 million. All right, it's quite very simple. Now, what we have next is this profit from sale of excavator, Abi, which was an income, Abi, as at the beginning. What is going to happen? For you to reverse it, what do? You subtract it, Abi. So that will now be profit from sale. Profits from sale of excavator. How much? 1.6 million. We are taking it out. So help me take it out. You should get 33,400. 33,400, correct. So that's what you call your adjusted profits. But don't forget, okay, don't forget, we need to treat capital allowance as well. Then the balancing charge and balancing allowance. I mean, so what did I tell you about our balancing charge and balancing allowance? For balancing charge, what did I say? You plus it. I mean, balancing allowance, what did I say? You subtract it. So let's plus first, balancing charge. How much is it? 1,315,000. Let's plus first. Help me out. You should get 34,715. Confirm. Correct. So now deduct the guy. You are deducting your what? Balancing what? Allowance, Abi. Allowance. How much was it? Balancing allowance 677,000. And your balance, sorry, where's your capital allowance? Here's your, yes, capital allowance. There, your capital allowance. You know, that's what you're using to replace your depreciation. So let's subtract capital allowance, which is how much? 6,575,000 in brackets. So that will be all, ladies and gentlemen. Figure me. That should give us, check confirm 27,463,000. That's our accessible profits. Correct. So we are done with that. Any challenge with this? No challenge. All right. If that is done, what is the next requirement? It said determine the share of profit among the partners. Determine the share of profit among the partners. All right, so I'm going to be doing that on the year. Okay. So, but before we do that, let's read the additional information that we have and see if anything can guide us. Now, the following additional information was provided. Number one, they said profit sharing ratio as agreed. So BB, Koshe, and Powora, their profit sharing ratio is 1:1/2, 1/4, and what? 1/4. You see it? And the next one says that BB and Powora are both entitled to interest of 5% per annum on loan of how much? 10.5 million each. So two persons gave us loan. Who are they? BB and Powora. Now, because they gave us loan, they are entitled to 5% what? Interest on their loan. How much did they give us as loan? 10,500,000. Then that's each. Then I said, Powora loan was refunded. Powora's loan was refunded in full on the day of his retirement. So I think Powora retired from the partnership, and we gave him his loan, 10,500,000, with the day he retired. Yeah, the full loan. And then that's the salaries paid to the partners. Each partners are collecting salaries. Look at it. All these things have already been adjusted for in the net profit. You understand? They have adjusted it for the net profits already. That's why we did not take it to the net profit again. So there's a salaries paid to the partners where you see paid to the partners where these are the salaries. No wahala. Now then I said on June 30th, 2018, Powora, who is the oldest of the partners, retired at the mandatory age of 60 years. You see, he retired. So normally when a partner retires, are you getting it now? It's more or less like you are terminating the partnership because he's no longer part of the partners again. Either somebody is coming on board to replace him, or the partnership will now be between two persons. You understand now? And I said, in order to fill the vacuum created by Powora's retirement, JC was admitted as a new partner on July 1st, 2018. So one thing you must understand here is that when did Powora retire? He retired 30th June 2018. Don't forget that the accounting year started from January and it ended in December. So it simply means that Powora is only entitled to anything that they make from January to where? June. Then the new person that came on board, JC, will be entitled from July to December because he was brought to replace Fowora. You get it, I mean? So that's why I said, in order to fill the vacuum created by Fowora's retirement, JC was admitted as a new partner on July 1st, 2018, based on an annual salary of how much? 8,250. So they are going to be paying JC 8,250,000. JC is also entitled to 5% interest per annum, having introduced a fresh loan of 7 million. So JC also gave us loan, 7 million naira. We'll pay him 5% on the loan. Okay. When did he give us the loan? July 1st, 2018. It's very important. You must know the date so you'll be able to calculate your interest. Somebody that gave us loan in January and somebody that gave us loan in July. Is it the same amount of money they take? No. So even if the total amount is the same thing that they give to us, they will not go on with the same interest. And I said the profit sharing ratio after JC's admission are as follows. You know, Fowora is now out. So the partnership is now between who? BB, O'Shea, and who? JC. So this is now their profit sharing ratio. 1/2, 7/20, and 3/20. Fowora has no further income within 6 months after his retirement. What is that 6 months? July to December. There was no any other income for Fowora. But a sum of 900,000, which was paid towards his annual vacation, was included in the partnership expenses for the year. So they gave him 900,000. Okay. So it's going to be an income in his hands. The tax authority agreed that the business should be treated as ongoing, such that commencement and cessation rule will not apply. So forget anything commencement here, and forget anything what cessation here. We are good, Abby. All right, so let's determine the profit, the share of profit among partners. So I'm going to say number B, share of profit. Okay, the first thing I want you to understand under the share of profit is simple. That's AIIS. So the first thing I want you to understand is very simple. What is it? I want you to understand the fact that first, they are sharing this money, 27,463. Abi? They are sharing this money now. Good. So we are sharing 27,463,000. That's the first point I want you to understand. The second point I want you to understand is that there are two types, there are two partnerships here. There are two partnerships. The first partnership is between who? BB. So let's say first partnership, which lasted from when? 1st of January 2018, Abi. So what? When did that guy retire? June. So 30th of June 2018. It is that time that he retired that that first partnership ended. And the partnership was between who and who? BB, Abi, O'Shea, and Fowora. Okay, you understand this, Abi? Then we have second partnership. Second partnership. Which started from when? 1st of what? 7, Abi, 2018 to where? 31st of December 18. And it was between who? BB, who again? O'Shea, and who? JC. Is this clear? It's clear, Abi? Okay. So it therefore means that each of the partnership lasted for 6 months. Abi? 6 months. So therefore, if you want to share 27,463,000, just say divided by 2. Half will be collected by this first partnership, the other half will be collected by the other partnership. Do you understand that? So help me divide it by 2. Yes. 13,731,500. So it is 13,731,500 that we are going to share between these 3 partners. So how much will Billy collect? What's the sharing ratio? Nope. 1/2 old. That's the first sharing ratio. So 1/2 of 13,731,500. Okay, let's check for Cochet. That's going to be 1/4 of what? 13,731,500. Then the last guy is Powora. 1/4 13,731,500. Yes, are we together? What do you get? Let me see. Okay. Give me your figures, please. 6 million. Okay. 865. 750. Okay, checked. Correct. Correct. Next. 3 million. 432. 875. Correct. Checked. Or the same thing. If you add all those figures together, okay, you get your 13 million. Are we good now? So the same thing for the second partnership, they are also taking the half. So let's take that half. The same thing, 27,463. Yes, we're done with the first partnership. Divided by 2. So they are also sharing 13,731,500. First of, yes. So we're going to calculate how much is BB collecting. What's the sharing ratio for the new partnership? 1/2. 1/2 of 13,731,500. And how much is Cochet? Is it 7? Okay, 7/20. 13,731,500. And the last guy, which is what? JC. 3/20 times what? 13,731,500. Figure me. Which one? 6 million. The same thing, Abby. 865, Abby. 750. Thank you. Look for the next guys. Let's confirm those figures. Check. Okay. Yes, 7/20 times 13,731,500. $1,806,025. So checked. Correct. Next. Total must give us the same 13,731,500. 2,059,725. That is all for AII. No challenge now. No challenge. All right, so let's move to the next guy. The next guy is saying AIII. So let's name this one. Where this is okay. This is AI. Okay, AII. Okay, AII. Show the relevant workings for prorated salaries, like for salaries. You know, it's prorated because they did not work up to 1 year. Or 6 months, the other guy 6 months. And interest on loan of the affected partners, assuming simple interest. So we're doing two things. We are doing salary. Are we there? Yeah? Yeah. What's that? Yearly. Yes, yes, salary for 1 year. Then we are doing interest on loan. So the first question you ask yourself is that who are collecting salary? Yes, an earned income, yes. Who is collecting salary in the question? Let's see. It says salaries paid to the partners were, okay. Now for BB stayed from the beginning to the end of the partnership. So there is really nothing like prorated salary for BB. Is it show relevant working for prorated salary? So we are not prorating the salary of BB. Prorating means, you know, sharing it. Kosher 2 stay to the end. So I think basically Fowora is the only guy. Now don't forget, Fowora only worked for how many months? 6 months. So it therefore means that Fowora will not collect this 8 million to 250,000. Isn't it? He can't collect this money now. You get? So what is going to do is to say 850,000 times 6 months divided by what? 12 months, because it's a 1 year salary. So give me the figure. You understand this, Abi? You understand what I did? Fowora only works for 6 months. It's in the question, yes, times 6 months divided by 12. Anyone you do is correct. 4 million, 1 to 5,000. So this is the salary that Fowora will take home. Let's confirm that. Correct. Are we good? All right. So the next one is going to be, the question says prorated salary. So we have done the prorated salary for Fowora. Then the next one says what? Interest on loan. Basically, there are 3 persons that gave us loan, Abi. Let's check. It said BB and Fowora are both entitled to interest of 5% per annum on loan. Do you see it? Of 10,500,000 each introduced to the firm. So BB gave us loan, no doubt. Who again? Fowora gave us loan, no doubt. Then JC gave us loan. JC gave us loan, Abi. JC gave us loan. So this is JC's loan. Now, BB gave us a loan of how much? 10,500,000. The same thing with Fowora, 10,500,000. But how much loan did JC give to us? 7 million. Are we good? Are you seeing it there? Now, JC's loan was from July 1st, Abi. 1st of July, 18, Abi. So it will end at what? 31st of what? Of December, 18. So it's a 6 months, Abi. It's 6 months. So what we are going to do is to say 7 million. You know, we're calculating the interest. What's the interest? 5%, Abi. So 5%. So just say times 5 divided by 100. Then times 6 divided by 12. Yes, now it's a 6 months now. 175,000. Case closed for JC. Fowora is still 5%, Abi. But it's for us, for how many months? 6 months too. January to June. He left in June. Abina. So times 6 divided by 12. Do it for me. Oh. Yes, 10.5 million. Let's show that this one is correct. How much? 31,500. Are you sure? 10,500,000 times 5 divided by 100. Any answer you get times 6 divided by 12. 31,500. Yeah. It's not possible now. This is 7 million. This is 10 million. If this one is 175,000, this one can be 31,500. It's not possible. $262,500. So for BB will take everything 5% because it started from the beginning, Abi, to the end. So actually, BB was not part of the prorated. We did not prorate anything for BB because I think they only told us to calculate the prorated. Calculate the relevant working for prorated salaries and interest. So BB should not be part of our solution on a normal day because BB is not prorated. It's a full year. But I just want us to calculate it here. So 5% of 10.5 million is how much? Ego only 500 and something K. 525,000. All right, case closed. Case closed. So these are the only prorated for Ora and JC because they are shared during the year. But BB collected for the full year. So it's not part of our solution, but I just have to just show it here for knowledge sake. So I think the last one is AIB. So accessible income of what each partner, Sabi. So what would be income in the hands of each partner? Okay. For which year? Yes, for 2019. You know, the period is for 2018, but it's on preceding year basis now. Year of assessment. All right, so let's go. We have BB. Who again? Crochet. Who again? Ora. Then we have JC. Yes. So I account for all of them. Okay, I account for all of them. So what do you do here? There's nothing to cram. Just look at all the money that comes into the hands of who? The partners. So the first one will be taking his share of profits. When they share profit, it comes to the hands of each word's partners. Okay. So what's our share of profit? We've done it before. We have to add both. We can add both for BB. 6.8 plus that, just say times 2 because it's the same thing. 68765, 750 times 2. Okay, hold on. 13 what? 735. 731,500. 731,500. For Crochet income, we've done it before, so just add up the old and the new. Crochet was 3.4. 3.4, yes. Add it to the next one. Give me the total figure. Let me add up. How much? 8 million. 8 million. 238,900. Fowora uncle. Fowora is just in the old, Abi. 3432875. This is 3432875. So we have 3432875. Then JC is in the new partnership. 2059725. 2057 what? 25. Okay, I won't be picking total for now. You can do the total by yourself. All right, so apart from that, salaries will come to them, Abi. What is salaries? What's figure for salaries? For what is how much? 4,125,000. We've solved it before. Let's show them salaries. So for Wora, 4,125,000 because it was prorated. But apart from Wora, the rest one the same. But JC will be prorated too. Yes. Let's check the salary. Salaries paid to the partners were for BC to be 10 million. BC will go with the whole salary. BC is still part of the partnership, Abi, till the end. Then Kosho, Abi, Kosho will go with the whole salary too. 8,250,000. But you see, JC has, where did they say? JC has an annual salary of 8,250,000, Abi. But so you're going to say 8,250,000. JC was introduced in July, so 6 divided by 12. That will give us JC salary. Yes, 6 divided by 12. 4,125,000. So is there any other? I use full for BC and Koshe. They stayed from the beginning to the end. Are we there? So we have loan, Abi, interest on loan, not loan, no, interest on loan. We have done that one before now. Abi, look at it up. Interest on loan. For BB is how much? 525,000. Abi? So BB, BB, come to the bar. Koshe Unko, there's nothing. Koshe did not give us loan. What about Powora? 262,500, Abi? 262,500. Then for the last guy, Unko, for JCS, 175. Very simple. All right, so there's one more income, okay, that we saw. Vacation, Abi, 900,000. Who did they give? Powora. Powora was paid 900,000. Huh? Koshe salary. Everybody receives salary now. It's only interest on loan. He did not give us loan. So since he didn't give us loan, there should be no interest on loan. So help me add up. That's all. So she give us 25 million, have you? 056,500. You do this to 8 plus 8, 16. This should give us 16 million. 480. Okay, 488. Yes. Powora is how much? 8 million. 720. 375. Can confirm. And this will give us 6 million. 359. 725. So please do for the total by yourself. I think that is all. This total part. And put figures there. So that is all. I think the figures are all good. That is all about the question. All right, so there's a B part that we can address quickly in just 1 minute. They said ABC Limited has been in the business of clearing and forwarding in Nigeria since 2007. And I said the company has a standing policy of declaring dividends to the shareholders and has continued to do so despite the dwindling business activities in recent years. The following information was extracted from the ABC Limited income tax returns submitted to Federal Inland Revenue Service for 2016 year of assessment. Okay, so from the returns, from the document that they submitted to FIRS, this was what they were able to extract. Now, watch. They said total profits for 2016 tax year is how much? 10,899,000. Then I said tax assessed based on the total profit at 30%. Run 30% for me first. Let me see. Are we on the same page? Good. So we're on the same page, I mean. Then I said dividend declared. How much? 14 million. Then I said required. As the desk officer in charge of ABC Limited, compute the revised tax policy, tax liability, the revised tax liability of the company in line with Section 19 of the Company Income Tax Act, Cap C21, Law of the Federal Republic of Nigeria, 2004, as amended. 10 marks. Why would they give this short distance 10 marks? See, ICAN will not dash you marks. They know what they are doing. And now, but only this small part, this B part is 10. That's what's making it 30 marks. The B is not small. How many figures do you see there? 3 figures. Are you not seeing it? Easier now. Look at the screen. So they are not dashing you any marks. So they need it to work. It's just 3 figures that is here. So what they want us to do here is to calculate the revised what? Tax liability. What's the tax liability? The tax liability is 3.2 million, which is this. But they say you should calculate the revised. It simply means that the tax authority are saying that this 3.2, they don't feel like it should be the actual tax. To calculate the revised tax. Now, looking at what we have here is just common sense, and I've taught you before. Look at, you declared a profit of 10.899 million, but you are paying dividend of 14 million. How? They don't want to know whether you borrow money to. You cannot. Nobody borrows money to pay dividend. Yes. So it may be that the profit was more than that. They underdeclared their profit. It may be that they are paying the dividend from retained profit. Are you getting it now? It's possible. But you have to prove to the tax authority that you are paying it from retained profit. That is the only way that they can leave you. But once you cannot prove that it's from retained profit, they will not ask you, where did you get the money from? So do you know what they are going to do? They are going to say, okay, this dividend will not be the new profit. Yes, now I've told you before. So that will have be 14 million times 30%. So that will be how much? 4,200,000. So this should be your new. This is your adjusted. This is 4.2 million. I mean, remove 3,269,000, which is the tax assessed. Remove it. 931,000. 700,000. So it simply means that you are going to pay extra 700,000 as tax. That's 700. Let me confirm. The figure you are giving to me, I don't understand. 930, 300 now. It's 700. 930, 300. Is it 700? Okay, yes, 700. Okay. So do you understand it now? That's what they did here. So this will not be your additional tax. So they know that some of them will not be able to get it. That's why they attached. Yes, now that's why they attached 10 marks to it. Yes. It's not for 10 marks. So you don't know it, you don't know it. So it's very simple. Okay, so you cannot be paying dividend. Be above your net profit. Where is the money coming from? So they have to reassess you to tax. That is how. That is all. Let's see the performance, Sha. Candidate performance was average. The inability of the candidate to correctly determine the disallowable items led to wrong computation of accessible and adjusted profits. The candidates are advised to read ICAN study tests, relevant textbooks, and applicable statutes for proper understanding of disallowable expenditure for future examination, and attend Accountant Pathfinder Tuition Center for comprehensive lecture delivery. So that is all. Ladies and gentlemen, I remain Dr. President. Thank you for your time, and thank you for staying with me.